Zoom. I guess it's asking you, your little note takers or whatever, are asking you if you want to record and you're clicking yes. But I deny that because I'm recording. But if I click yes to that, then my recording doesn't work for some reason. So anyway, you guys can go watch the replay when it's done recording. All right. What is going on here in the crypto world? Another fine day. Yep, I agree. All right. Welcome everybody. We got a lot of people on today. Give me one sec. I'm going to share my screen. Before I share my screen and just start talking, if you have a specific question about something that you haven't been able to get answered, just post it in the chat, guys. I will answer any question I see. One thing that bothers me a little bit is when I spend 2 hours on these live calls and then someone asks the question in the chat in the Discord after the call's over, and then it doesn't get answered right away, and it's something they needed to know right then. So just ask it on the live call right here. That's why we're here. Or they'll send me a DM and say, I didn't want to ask on the call because I think it might be a dumb question and I don't want to sound dumb. There is no dumb questions, guys. Ask it. Everybody's here to learn. All right. With that being said, what is going on here? So this is Bitcoin. And if I zoom out on the daily, some interesting stuff happening here. You get rid of some of these lines so it's less confusing. We do have the overall, upward trending. And we have the bottom upward trending support, this blue line down here. Going all the way back to about 49 grand right there for Bitcoin. We have this upward trending. It is basically a channel that we've been in for a while. And if I really zoom in, I actually posted a really good, where is it? It was this one, I think. Nice and clean. That's from my laptop upstairs. I need to clear all my lines on this one. But so on the daily, we've had 3 in a row falling wedges that broke to the upside. Going all the way back to, back here, this was 73K, 108, 109, dropping down to 74.5, which is a retest of this level. 112, 123, 124, 126, dropping back to a level here. And this is where we're at right now, bouncing off of that. So if I zoom in, we actually did bounce off of it right here when we came down to the 98K, boom, boom, double bottom, and we started to climb. And we were climbing in a channel, basically, back up to the top of this downward trending. Let me get rid of the Williams alligator on here. Too many lines going on. Moving average. We were climbing back up to this downward trending resistance line, and we hit it. And we wicked right through this support level as resistance. And then we dropped below this little upward trending line. So on the daily, let me go down to like a lower time frame, to the 4 hour, so you can see it better. And if I move my lines to really cover all the areas of where it should be, that's probably it. That's probably better right there. And breaking to the downside. Now we did that here, and we wicked down to this line and came right back up. We're doing it again here, and this line down here is the same overall upward trending support line going all the way back. am still in my long, obviously from up here. And we went really profitable and then came back to right to break even and profitable again and now negative on that one. But my liquidation is down here and I will get concerned if we break this upward trending support line. As of right now, I have a feeling we could just bounce again and it will look like this. And possibly if we hit that as resistance, that's not necessarily good either, but we're still in a downward trending resistance from the top. If I tighten this up a little bit, I would say right there. I'm touching all of these wicks and here, then we are in a tight apex. So let me get rid of this. If I get rid of this channel now, just to show you, we're basically in an apex, which is right here. This corner. And the bottom of this corner is also happens to be the upward trending support. And this downward trending falling wedge pattern that we've been in, which is what we've broken out every time so far. If we go back, here's another one. We came and we did wick down again one last time and we went through this line and then we bounced out. And then even before that, we did it again over here. We hit the top, we came down to the bottom, we touched it, came down to the halfway mark, broke out, retested, and climbed. Touched it, broke out, touched it. Are we going to bounce on it again? Looks like it. It's going to be around the 100K level at this point. Back here, it was 98K. Right now, it's looking at like 100K. Now, if we break through it, it is possible that this might be the time that we come down and take out the CME gap down here in this zone, which is the 91.5 to 93.5 zone. You can't see the gap. You can't see the gap here on this chart, but on the CME chart, you can see the gap. And that's the only CME gap that we haven't filled. We've had a bunch of them happen along the way that have already been filled, but this one has not yet. And so do they always get filled? Not necessarily, but let me take this line, this downward trending support line. Change that to yellow. And just continue to bring that down. If we were to come down and hit this, it would probably, be right there. Somewhere in this zone here. And I don't know if you guys watched my most recent YouTube video, but but that was before I did that YouTube video. Before, I mean, it was done before we dropped down to 98K. We were up here somewhere. Let me just go back to the chart. We were up here somewhere, coming down in this wedge, and the wedge was to here. We were up here somewhere, and I was basically saying we were going to come down and hit the 98K. Of course, I did post that in the Discord group several times about coming down and hitting 98K. This is right where we bounced off of, but on the actual YouTube channel, which was pretty, whoops. Yeah. Which it sucks that the YouTube, the video was not published until after that actually happened. But anybody who knows anything about trading and actually can look at the dates and see that we bounced exactly where we said we would. And so it just so happens that that CME gap is lower than the upward trending support line, which would not necessarily be good for Bitcoin to go below that. We have been staying above it since August of 2024. And every time we bounced on it, we climbed and made a new high. And we just bounced on it here at 98K and then double bottomed and then started to climb up, but again, made a lower low. And now we're coming back down to it right now. So we're at 1015 at the moment and falling. And but this area right here where it's coming to about 100,000, I would say maybe 100K right on the nose, anywhere from 100K to 103, 104K maybe. Another $1,000 lower than where it's at right now would be where it needs to bounce.
A lot of the YouTube gurus are saying this is going to be the time it goes below that, Nico. So maybe they'll be wrong again.
Yeah, or maybe not. I mean, like I said, guys, if it does go below it, there is a reason, and that's to fill this gap down here, this CME gap, and that certainly could happen. I'm not going to say it's not. I'm just saying it needs to bounce at 101 or 100,000 in order for this to be the time that it finally pumps up to a new all-time high. Otherwise, we're going to have some more pain for a little while. And this would be if it gets below that 98, guys, then if it does fill this gap, let me just give you a breakdown of if it bounces here, then it's probably going to break out of this downward trending channel and we will shoot for new all-time highs. We got 30 days pretty much. I mean, we got until the end of December. As far as the 12-month candle is concerned, as far as this bull market is concerned, if we're basing it on history, because we are at the end of the third year of the bull market. Bull markets generally only last 3 years, then they're down one, and that's only based on history. History does tend to repeat, but it also can change. So a lot of people say, yeah, but this time is different. Okay, well, I'm all for being different. I'm all for this time being different, but I haven't seen that happen yet. So you can say all day long, and I even say it, that so many different catalysts, so many different things are different this time. We have a crypto-friendly government in administration, crypto-friendly president, not only himself, but his wife and all of his children have their own crypto coins and even platforms. And so there's a lot of crazy things going on that were never happening in previous bull markets. But back in those previous bull markets, there were some crazy things happening too that everyone thought were catalysts that should have shot us through the moon and made that time different, but it wasn't. And bull market and bear market cycles have been going on for hundreds of years in the stock market. And the 4-year cycle is not just crypto, it is the stock market as well. 4-year cycles have been known for decades and decades and decades before your parents were alive. So it has nothing to do with just the crypto or Bitcoin market. But it just so happens that since Bitcoin started, they've been 4-year bull and bear market cycles. Now, a lot of people say, oh, it's because of the halving every 4 years. Well, maybe they created it that way to match 4-year cycles. I don't know. But the 4-year cycles existed prior to Bitcoin. There is a really great graphic, a really great illustration, which I did share a while ago, and I'm going to try to find it right now and show you guys because it's kind of amazing. And this is something that was created like 100 years ago, back in the late 1800s. Let me just find it here because it is so accurate and so ridiculously simple. And I did share it in the Discord a long time ago, and I wish I had it right here on the top of my list to share to you. I have it somewhere, and I will find it, but and I will share it again. I don't know if Bill knows what I'm talking about. He might have reshared it.
I do know what you're talking about, and I'm having trouble finding it. I'm looking through all of your old. Do you remember what keyword you might have used?
Oh, um, it was representing all the good times and bad times throughout history. Um, I know I have it in a file that I'm looking at right now. I just need to scroll through it and find it, but I can't remember what I would have called it, to be honest with you.
Right. I'm looking. You've got a lot of pictures. You have
And I thought maybe
3,211 up
you
there.
actually copied it and shared it in
I,
your own files. I just don't know what you would have called it.
yeah,
But
right.
what
I don't
didn't
remember.
you mention the guy's name that came up with that
Was it the
I
graphic?
Benner?
did, and
Are
I
we
don't
talking about
remember
the
his
Benner
name either.
cycle?
Say
The
it
Benner
again.
cycle? Are we talking about the Benner cycle?
That might
Benner?
Yes, I think so.
I did save that. Hold on, I'll find it. I'll find it.
because that was like in like 1880 or something like that.
That's correct. And it's actually quite astonishing when you understand what it's showing you. And it's basically saying that it's telling you when to get in and when to get out of market cycles, based on the years, going all the way back. And
I can't find the image, but I did a real detailed breakdown on it. I'm
oh,
gonna
I
share
found it. I found it.
Yay. I'll keep it in the folder.
Yeah, I'll share it in the
Edwin Wanch, is
Yeah,
that the same one? Yeah, periods when to make money. Okay. Yeah,
um
that's awesome.
I forget the guy's name. It's down here somewhere, but I think that you said it right.
Benner.
So,
Yeah, Benner.
time to get out of the market. B, years of good times, high prices, and the time to sell stocks and values of all kinds. Right here on the center line. Remember 2008 real estate crash? Boom, 2007, get out. Sell. 2016, when's the next one? 2026. Is it the beginning? Is it right at the end of 2025 when the bull market technically ends? Or is it sometime in the middle of 2026? I don't know, but so I'll share this in the thing, but you guys need to study it. And then if you need more info on it, you can Google it. But
Put a
if you go
whole
back and look at
breakdown.
all of these different years, it was spot on accurate every time. C, years of hard times, low prices, and good time to buy stocks. Now it says only stocks because this one, when this was written, it was only the stock market back then. Stocks, corner lots, goods, etc., and hold till the boom reaches the years of good times, then unload. I mean, crazy, right? And then up here, A, all the A's up here is years in which panics have occurred and will occur again. The next one is 2035. (1875) this was written. We just so happen to be living in this time right here. And so I look at these things and I don't dismiss them immediately just because for whatever reason, oh, this time is different. No, you can't do that, guys. You can't do it when they've been proven accurate throughout history. So you have to use, there's an old saying that, what is it? Millionaires use logic or data and billionaires use astrology. There's a time when you gotta look at all the things, the stars alignment. I mean, even the moon, the lunar cycle has its own website to predict Bitcoin tops and bottoms based on the lunar cycle. And you might laugh at that, but when you go look at it, it's like, holy cow. Every time the moon is like this, or full moon or whatever, this happens. And it actually, there's something happening. So it's like you can't just dismiss this stuff as nonsense or, hocus pocus when there's actually something to it. So I don't bet the farm on it, but I measure it compared to what's actually happening and what time of the year it is and what cycle we're in and all this stuff. And I'm like, wow, okay, that's interesting. It's interesting that in that document, he's warning to unload in 2026.
How about when the
Nico.
McRib is back?
I just put it in the chat for everyone if you want to download it and copy and paste it to your own computer or whatever. Say that again.
How about when the McRib comes back?
Yes, there's something about that too. McDonald's McRib. I know it's crazy, right? Benner cycle applied to crypto. Bill just posted. Let's pull that up.
I think they figured that it goes down with that. They were saying that it goes up, but then somebody actually did the research, and I don't know. I just like the McRib.
Who knows what it's made out of, right? But
Right. Somebody said human meat. Let's hope not. Let's hope it's
Yeah.
not made of people.
well,
It's all
that's a whole other
garbage.
that's a whole nother topic for your conspiracy channel, guys, because there are a lot of missing people out there, and I haven't seen any new cemeteries in my whole lifetime, and I haven't
Bingo.
been to a few funerals, but compared to how many people are supposedly dying every day, I don't really see a lot of hearses driving around blocking traffic. So it's just kind of weird. Where's everybody?
Did you ever
at?
see that movie? Did you ever see
Soylent
that
Green?
Halloween movie, Phantasm? Did you ever see Phantasm? Where they
I don't think so.
took oh my God, man, that movie haunted me as a kid. They took the bodies and they turned them into like midget slaves on a different planet. It was the craziest movie, but you're right, and it's creepy.
Yeah, I haven't seen that one, but I am fascinated by all that stuff. But it's like, yeah, I don't know. This world is kind of crazy, guys, and sometimes you could easily just say, you know what, it's too far gone. I don't want to be here anymore. Let's just end it and get it over with. Or you can say, well, listen, we're here for a reason. We're here to either witness something or experience all this. And if you're going to experience it all, you might as well not be stressed out about bills while you're doing it, because we happen to be born during a monetary society where money is created out of thin air for the sole purpose of enslaving the masses. And there's trillions of dollars worth of debt. Every country is in debt to some other country, but who are they in debt to? If the whole world is in debt, who do they owe? And so it's just it's all intentional. It's all by design to keep interest flowing. Interest, by the way, is impossible. And it's only possible if you keep creating more cash. In other words, printing more money. I mean, if money was backed by something and there was a finite amount, interest would be impossible, because you can't pay back more than you borrow. Technically speaking, if you borrowed every dime in the world, how could you pay back more than that? If there's only 10 Picassos in the world and you borrowed all 10 with the agreement that you're going to pay back an extra Picasso as interest, it would be impossible, because there are no more. They would have to print more Picassos. So when you really get it, when you really understand it, it's maddening. It's like, it's frustrating, it's aggravating, but at the same time, that's the society, that's the system we're born into, and that's what we either have to play by those rules or opt out, right? And that's why when you see these little memes of a little log cabin in the wood with some smoke coming out of the fireplace, and the caption says, "How many of you would give up, or live here for 1 year with no cell phone for $1 million?" You ever see those stupid things? And everybody's like, "Oh my God, I would do it for $0." That's my dream, to move out in the middle of nowhere and just be out of society, right? People say that all the time. But the reality is so different, guys. In order for you to live in solitude in a log cabin in the middle of the woods with Wi-Fi, so that you can be connected somehow to the world, Millions of other people, hundreds of other people have to go to work every day for you to live that life. To keep the infrastructure running, to keep the internet running, to keep the water running, to keep the, everything that works in the world has to run in order for you just to get Wi-Fi. And so there's a guy that explains this very well. It is actually, if you had to make your own chicken sandwich from scratch, and what I mean by that is you had to grow the wheat to make the bread, raise the chicken from an egg, and you had to do that from scratch. It would take you 6 months to make one sandwich. People don't realize what's involved in everything that we take for granted.
There's a story about a guy by the name of William Patterson, who was Scottish, that supposedly engineered the whole financial system about debt repayment and started the Bank of England in like 1694, early 1700s, by loaning England money to fight their wars.
Yep.
But part of the contract was that the loans would never be paid back, and they only paid 8% interest forever.
Yeah.
And that's, I guess, supposedly that's the cycle, that the $315 trillion debt that the world's in is on. You're never going to repay it.
That's correct. And America, just every other country just followed the same system and did the same thing. And that's where it started. Yeah. It's kind of
Nico.
nuts. Yeah.
I want to take your challenge at the beginning of the call. I'm transparent in the fact that I've only been in the group for 2 months.
Yes.
And I have studied and studied and studied, and I still am I've gone into mock, and I fail in every one of my trades. I watch the videos over and over again. But to get to my point is looking at your screen here. I understand the trend lines. I understand the W's, the M's, the teacups, and all that. And I put the trend lines down there. And then I'm looking at your two RSIs down below. And I'm thinking about the market cipher. And I'm trying to predict this. But it's like, okay, on one hand, it could go up. And on the other hand, it could go down. I'm trying to be more precise in my understanding of how the patterns are going, not only the patterns, but the chart is going, so I can make good trades. And I'm still beating my head against the wall. And I don't know how to ask the question other than to say, how can I become better? Because I've been studying all this for the last 2 months every day.
Okay. Yeah. Well, you're not alone. There's other people some people get it really quickly, and some people take months or give up because of frustration, because they keep doing the same thing over and over, expecting a different result. You said something very important there. You said something about you're trying to predict the market, trying to predict the direction, right? Go to my YouTube channel and watch this video about that. The one that I just circled right here, this one. And sometimes my headlines, my titles here, maybe even piss some people off because it's easier than you think. Of course, that's going to piss you off because it's not easy. Well, it is easier than you think, but just copy me, the dark, all these headlines. But the reality is that it's kind of like, have you ever done a magic trick? Someone showed you how to do a magic trick.
Yes.
Someone gave me one of those fake thumbs and showed me how to use it. I don't know if you guys ever seen those before, but it's a sleight of hand trick where you can make things disappear in your hand and everybody is totally blown away and baffled. I mean, literally can't figure out what you're doing. For hours, people are like, oh my God, you got to show me. How did you do that? How'd you do that? What is it? You're driving me crazy. What is it? Can you just show me? And it's so easy for me to do once I know how to do it, that I will drive people absolutely mad, taking their cigarette out of their hand and literally put it in a hole like this and going like this, and it's gone. And people are like, what the hell? Or I'll take water and pour it in the hole right here. I'll pour it in there, pack it in, go like this, and there's no water in my hand. What the hell? How you doing that? I'll pour sugar or salt in that hole, pack it in, go like this, and it's not there. People were like freaking out. Okay, but it's because I had the magic thumb. And I don't want to ruin it for everyone, because when you understand this, it's like, oh my God, that's it. That's what people are doing when they're making things disappear in their hand. Yeah, it's just a little prosthetic thing that you put over your thumb that you slide off, and now you pour stuff in it, and then you pack it in. When you pack it in, you put your thumb back in it, and now it's on your thumb, but people don't notice that. And they see nothing in your hand. They're not looking at your thumb anymore. They're not looking at you have a fake thumb on right now that's filled with the sugar or the water that you put in it. And you're going like this, and people don't see that because you're holding your hands like this, and you're facing your tip of your thumb towards their eyes. So it is an illusion. And that's why magic is so powerful. People are just can't believe or can't understand how the magician is doing it. But once you're shown the trick, once you see what is happening, it's like you go around to, oh, that's just one of those magic thumbs. Oh, I know how he's doing it. And immediately you got it, right? But until then, you could be baffled for years, frustrated, trying to figure it out, and even mad and angry until someone shows you. And unfortunately, with trading, it may look, how are these people making money day in and day out? How are they doing this, blah, blah, blah. And you get aggravated and frustrated because you keep trying, but for some reason it's not working for you. Now, let me ask you this, Parker, I can't remember if you told me it was Parker or Park, but I apologize.
It's just plain Park with no E.
Park. Okay, Park. Sorry. I'll remember that now. Have you had any winning trades?
No,
None.
none.
So you're not even getting lucky. You're not even getting lucky.
Right. I have about 8 mock trades, and I think 1 live one, all failures.
All right. So there's 2 things that you're doing probably. One, you're trying to predict the direction. And I say this all the time in here, and I've said it on many videos in the past, that we're not predictive. Like people say to me all the time, Nico, which way is it going to go? Is it going to go up or down? I'm not trying to predict which way it's going to go. I'm reacting to which way it's going once it breaks a support and resistance level. So right now, what you would want to wait for is, since it's so close to this upward trending support line, you would not go short now because it's too close. Because if you go short here and it goes like this and you're in profit and boom, it bounces and now you're negative. And you're like, shit, I'm negative. What am I doing wrong? Well, you shouldn't have went short there, for one. Second of all, the next thing is, when do you go short? You don't right here. You wait for the bounce. So it comes down and bounces. Now, that doesn't mean you should go long right there, because it bounced here and came back down and bounced again, came back up and was a lower high and came back down. Then it made a higher high. So that's positive. But then it came and it made a higher high here. I mean, a higher low here. So we're in a upward trending channel. So what we want to wait for is a breakout. A breakout of what? A breakout of this channel. It's either going to break to the upside of this and retest, and then you go long, or it's going to break to the downside. Well, guess what? It just broke to the downside. But so normally we would go short because it's breaking to the downside. But the reason why I didn't give a short signal and we're not going short is because it's too close to the upward trending support. So you don't want to go short when support is so close. You don't want to go long here when resistance is so close. You want to wait for a breakout. A breakout is a breakout of the apex. This whole yellow cone is the apex. But I brought that all the way down to the point, which is where the CME gap is. But there's also this upward trending support line, which we've stayed above all the way, going all the way back to a year and a half ago, August of 2024. Here, we've stayed above that line this whole time in this upward trend. And every time we hit the bottom, we came up and hit the top, and hit the top and came down and hit the bottom. So if history repeats itself, we would want it to bounce off this blue line, just like it did here, and go back up to the top, just like it did here, and go back up to the top, just like it did, like it's doing now. We want it to go back up to the top. Where's the top? Well, it'll be over here somewhere up here in 130, 140K, just like it did all these other times. But so have you heard me say, or have you ever heard in trading, the trend is your friend until the end?
Yes, sir.
Okay. So the trend here is this whole upward trending channel. That is a trend. The trend is upward trending. There is no question. It's easy to see. The trend is upward, except for now that's the overall trend. Now, if we zoom in, let's look at this. Let's say you didn't see what I just showed you. Now you're just looking at this. Well, the trend is downward trending here. This is a channel inside of the big upward trending channel. So this trend is trending down, and this trend is your friend until the end. Where's the end? The end is when it breaks out of this trend. So here's the resistance, breakout, retest, bounce. On this breakout and retest, right here, bounce, breakout, retest, bounce, higher high, higher low. Chances are it's going to make a higher high here. This is where you would, first of all, where do you enter when this breakout happens? Do you break out as soon as it breaks out? You're not supposed to. You're supposed to wait for it to retest. And then when it bounces here, it should get higher than here. It should get higher than where it bounced out of. So a lot of people will go long here because it's breaking out. But as you can see, breaking out doesn't mean anything because it can come back down. Break out, come back down. Break out, come back down. Break out. This one right here broke out, bounced for a little bit, and then came back down because it never got higher than the first high when it broke out. It wicked above it, but it didn't hold above it. So what do you want to do? So when it breaks out and then drops after the retest here, it comes down to retest, you want it to get higher than where it broke out of. And if it doesn't, you don't get in yet. And look what happened. It didn't get up that high. It came back down to retest. Good thing you didn't enter here. Good thing you didn't enter here. Good thing you didn't enter here if you're waiting. And then it comes down and bounces again. And then it starts to come up. Soon as it gets higher than this, is that the time to get in? No, still not. It goes through it. You might say, okay, it finally broke out. That's great. But it should retest and hold as support here. Look what it did. It came back below it. Then it comes back again and gets through it. And right here, it's hard to see sometimes. Let me just put this where it's supposed to be. Resistance, 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 support, 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 falls through, retest, breaks through, and holds a support. That's when you enter, when it finally gets above the first breakout. So here's the breakout, this downward trend. I know this might seem confusing, but we say this all the time. So let's go look at another one. Breakout, breakout, comes right back down. Hits resistance, breaks out, retests, does go a little higher, but it doesn't hold above. Doesn't hold above where it first broke out. Let's draw a line there. Comes back down to retest again. Comes back up, doesn't hold above. Should you go long yet? Not yet. Right here, it breaks out and retests and holds as support above this line, starts to climb. So that would have been a good entry. Now, if you would have went long here and just rode it out, you'd have been okay. If you would have went long back here on the breakout and just rode it out, you would have been okay. But as you can see, sometimes we break out and it just comes back down. So what you really want to wait for is the breakout, the retest, and the climb higher than the breakout. That's how they teach us in hedge fund school. They teach you to wait for the breakout, wait for the retest, and the bounce higher than the breakout. That's what you're supposed to do. That's textbook trading. But if you would have just went long here on this bounce, you would have been okay. In fact, your entry would have been better, but you would have been positive here, negative here, and you would have got scared and maybe got out. So there's safe trading and then there's riskier trading. So I think that a lot of times, and let me ask you this, if you know the answer, Parker, if you don't mind sharing, how many trades have you taken?
In mock, about 8.
8. In what time frame? Since when?
I'm trying to recall. I'm always looking at the 12, the 4, and the 1.
In the past 2 months, you mean since you started?
Pardon me?
Since over the past 2 months, or just like in the last week?
In the last week or two.
Okay.
I
You
wanted
know how
to
many
learn
signals I've
before
given in the last week?
No.
Are you looking at the signal channel?
Oh yeah. Probably 2 or 3.
Maybe 1. And it's not because I don't want to give signals, it's because there was no signals to give. And that's because, so when you really know what you're doing, you're sitting on your hands waiting for the proper trade setup. Now, if I was just going long and going short all the time, I would have the same problem probably. So sometimes you got to wait for the right setup. And even right now, I'm negative in these positions that I'm in because I did give a signal. Let's just go and look at my most recent signals, right? Where was I? My current open position. So this was the 10th. So that's 2 days ago. I was long on all of this. And I was up $425 at the time of this share. But on some of these, I moved my stop losses into profit and the price came back down and was taken out. XRP fell out of this nice upward trending rising wedge, which, by the way, guys, is bearish. Rising wedges tend to break to the downside. Let's see. And there's what happened after that. Here's the rising wedge. It fell out and came back down. And I post these so you can see these are not signals. These are just kind of updates on what's happening. And this is what I was expecting to happen. Bouncing here on this line, maybe wicking to this upward trend and then climbing back out. Obviously, if it breaks below this upward trend, then we're going to go down further. So let's just go look at what happened on XRP. And I'll get back to answering your question, but let me just show you. Yeah. Let me just look and see what time frame that was. That was the 1 hour. Go to the 1 hour, and this is what it looked like. Rising wedge, fall out, coming back down to the upward trending support line. Let me just recreate that screen that I have here. Upward trending support line on the 1 hour. And resistance line right here. Support and resistance. Bounced on it, wick down. Let's just go back. Bounced on it. I said that it's going to wick down to this line. Is it doing that? Yeah, it's doing it. I mean, bounce and then wick down below to this upward trending blue line. That's kind of where we're at right now. We bounced and it's wicking down to that upward trending line right now. So let's just now, what's the deal here? Am I long still? I'm in an XRP long on USDT still, and I'm negative. So let's just see. Let's go back to my, that's what I was just showing you was my XRP margin, but let's look at my actual USDT margin. My long was up here. And we came back down to retest the top of this W line. But that's not even, this is not even drawn the same way I just had it on my other chart. As I draw different patterns, but let's just look at it here. I'm trying not to use my USDT chart much because it's very, very, you can see how long it takes to draw something up here. It's becoming a pain in the ass. I don't know why. Well, let me get rid of some of this other stuff here. But my point is that there is no guaranteed do this and you'll make money. You're definitely gonna make money if this happens. There is none of that ever. So what we have is the laws of probability based on market structure, on supply and demand, support and resistance, trend lines, and liquidity. And so then we look at all of the. Let me just go back to the XRP margin because the chart works better. And then we make educated guesses as to what's most likely to happen based on all of those scenarios lining up, right? And that's when we can get our win ratio up to 60, 70, 80%. But that doesn't mean 100%. That means sometimes we're still going to lose. But if you haven't won any out of 8 trades, then I would say that's not just not knowing how to trade. That's not even lucky, because even people who don't know what they're doing and never done this before get lucky every once in a while and have a winning trade. I mean, almost everyone I ever talk to usually make money on their very first trade somehow. Because what are the odds of it going the way you want it to go?
Nico, I hate to interrupt. I just had a question as far as your signals you uploaded the other day, your opening positions. I had a difficult time reading. How do you plug those in actually?
Well, I mean, I was on the live. I posted that while we were on the live call, and I went over everything on the live call about what I was looking for to happen. But those were my current open positions, and so that was on Monday at 2 o'clock, right at the end of our live call. So on the live call, if you were on that, I was explaining exactly what was happening, what I was in. I think I actually entered one of those positions on the live call. I think it was one of these. I can't remember, but that's probably why. I know I asked, I took a poll in the group. Do you guys want me to? Because a lot of times I do both, where I'll do it like this, where I'll post a signal like this, where it says entry 696.01, stop loss 647, TP none for now. That was the signal, right? And that's usually how I do it. Here's entry. And if I scroll up, you'll see here's XRP entry 217, stop loss $2, and I'll post the screenshot. That's what I've been doing for years. That's how I've been doing it for years. And then I posted for people who actually know how to enter and exit, sometimes it's helpful for them to see this instead, because this is how you read this. Over here on the left, these are my open positions. I'm long Bitcoin USD, coin margin. This one is a USDT. This one's a coin margin. This one's USDT. This is the size. So in this example, I'm actually showing you more details about my trade than just telling you when to go long and short. On this, I'm showing you my exact contract size, my exact leverage size, the entry price, which is the price I got in at, the amount I'm risking on the trade, and my stop loss or take profit target, which, as you can see, none of them. I only have a stop loss here on XRP at $2.40 on this one, and it was taken out. So, but I was talking about this live on that 2-hour class on Monday. So if you're right, if you're just looking at this without the context of me explaining it on the live call, it might be a little confusing. So I apologize for that. It's either I share the exact entries and exits, but this was after the fact. So a lot of people used to get on my case if I posted a signal and I said long Bitcoin 106,420, and then you look at my signal and you're like, wait a minute, Bitcoin's at 108 right now. When did you actually get in that signal? Well, I did that a couple of days ago, but I'm just sharing it now. No, I can't do that to you guys. So I can't give signals to things I'm already in, because it's too late for you to get in at the exact same entry. But if you go up, I gave the signals for all those current positions I was in. I gave those signals the other day. Let me just scroll up and show you. That's ZEC. I was in that one. Zcash, and then a little further, here's my XRP long, and my Bitcoin long with low contracts. But if you just scroll up, you'll see all these entries. I just been in them the whole time, this whole time. Bitcoin long since Halloween. Actually, long just on my B. So this one I went long just on my BTC margin, and I was still short in my other one. So you guys remember? I don't know if you remember or not, but I was short, and I went long also to hedge it. So I was in a long and a short. So the problem is that 3 days, 4 days later, I show you my open positions, and some of you are like, well, where should I get in? Is that a signal? No, it's just trades that I'm still in from when I did get the signal.
I appreciate that so much, man. 'Cause that was grinding my gears, but it all makes sense now. Yeah, it all makes so much sense now. I
Yeah, no,
greatly
and it's
appreciate
not
it.
your fault. There's only so many ways I can do it. Like if I'm still in a position, I would have to close it out and re-enter to give a signal. But why would I do that if I'm still in the position? So the only way that it would be confusing for you if you haven't been paying attention for a few days to either the live calls or previous signals, and then you just see me post that open my current open positions, and you're like, wait a minute, well, when did you get in, or when is this, or what should I have got in that, and is this a signal? I can definitely understand that confusion, and I need to be more clear when I share this. I was
It's
actually
okay.
posting this.
I'm new to the group, so it's been about a good 2 weeks for me. So I still be working 10, 12 hour shifts. So when I get off work, I be trying to hurry up and get on the computer and see what's
Yeah.
been going on and catch up. And just me having these questions I write down on the paper. It's good that you guys have these live calls where I can actually answer these questions and the
No,
transparency. So
yeah.
that's actually good. I greatly appreciate that.
No, you're welcome, and I appreciate you asking. And I wish everybody would ask the questions, especially if they're concerned or confused about something, because a lot of people stay silent because they don't want to ask a dumb question, or they're new and they think, oh, there's a lot of expert traders on here, and I don't want to ask a dumb question or be made to look stupid. I will
Well,
never
that's a
personally, Chad and I will kick someone out of the group if they make you to feel stupid. If someone ever
that's
says
a
something disrespectful to anybody in here, they will be kicked out of the group. I don't care how long they've been in or how good they are, because that's not proper. That's not proper assistance in our group. We want people to be helpful, and if you have nothing helpful to say to someone who's new and you can't remember when you were new yourself and needed help, then you don't belong here. Okay, so but the good thing is we've already cultivated that in here, and very rarely do we have bad apples that actually say something like that or do something like that. It has happened before, and that person begged to get back in the group, apologized profusely. They thought they were on mute. In fact, it wasn't even a message. They said it out loud with their mouth, and they were on mute, and they thought they were on mute, and everyone on the call heard, and we just kicked them right out of the group. So so basically, guys, the point is I'm trying to make is that I'm not infallible. I'm not always right. And I appreciate the positive feedback, because I can always improve the way I'm posting my signals and stuff. It's just I've tried it a bunch of different ways, and I had a lot, and I even took a poll one time. It was probably about a month and a half ago, where everyone agreed that they like this better, but that doesn't mean it's better for everyone. So everybody's got a different way of learning. But I will try to include, well, first of all, anytime I actually give a new signal, I do post it like a signal. I do post it like this. And it's just that there hasn't been a new one in the past couple of days because of where the market's at. It's just hovering right around this area where we're waiting on a breakout. So for XRP, we're waiting on a breakout of this downward trending channel that we've been in, which is right up against this upward trending support. So if I go out further, let me just show you. So we got upward trending support here for XRP. We are in an overall upward trending channel, right? But we are in a downward trending channel inside of the upward trending channel. And we're waiting for the breakout here. And so when we're this close to an apex, and the apex is this tiny little area in here, where it can either do one of two things. It's either going to break out up and go up, or it's going to break to the downside, and then we're going to have another huge drop. I don't know where or when, but last time, look at this. We dropped all the way down to $1.25, and then we came right back up and still held support right in this area. So this is definitely a strong support area. This was an anomaly because of Trump's tariff announcement against China. We came right back up, and we've been bouncing on this, and we've been still in this downward trending channel. And we just, after this big drop, we came back up, bounced, came up here, made a lower high, bounced again down here a couple times, boom, 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 climbed back up and made another lower high. And now we're coming back down again. So we're not done. We're not done in this downward trend, but we also never broke out below this upward trending support line. So what does this mean? This means to me that, well, we're still inside this apex, and the apex is right here, guys. In case you can't see it with the naked eye, let me just, I'm going to put it right there and right there, and I'm going to make it yellow so you can see it. Just take this one here and put that up there. It's this corner of this downward trending channel. That's the apex. It's support against this upward trending support line and resistance against this downward trending resistance line. And that happened back here once, where we were up here at the top, came all the way to the bottom, bounced, made a lower high, bounced, made a lower high, bounced again, and then finally broke out and climbed up. So we're doing the same thing, and the same thing could happen or not. Here's the thing. So back to you, Park, is that I don't know whether we're going to break to the upside. So I'm in a long position right now because I'm expecting it to bounce on this, but I know what I'm doing, and I'm a little bit more risk. I take more risk than I want you guys to take. So personally, we should wait for a breakout here. And so waiting for a breakout is boring, right? Everybody wants signals. Well, I want to make money. I don't see any signals. This group sucks. No, guys. If I just gave signals every 20 minutes, you guys your head would be spinning. And now could I? Yes. If I want to go down to the 5-minute chart or the 1-minute chart, I could scalp all day. And I could make money scalping all day, going in and out, in and out, in and out. But that's not what I'm trying to teach you guys to do, because that's really not, I mean, that is a way to trade, and there are people that do it. In fact, one of our highest earners in here, TJ, started that way and made like 26 grand his first month, 250 grand in 4 months. And you might say, well, yeah, teach that then. That's what I want to do. Well, that's very hard to teach, because by the time I even give you a signal, I'm closing that trade out. By the time I could even type in long at $2.20, stop loss hit, boom, I'm out. That's how fast it happens sometimes. And so if you don't know how to scalp, you need to learn first before I give you scalping signals. So what we're taking here are day trading signals. They can be scalps, but they're scalps on the hour time frame, or the 4 hour, and they're more like day trades or swing trades that could take hours to a couple days to fill out. And so if we're in a trade for a couple days, it might seem a little boring, guys. We're waiting for something to happen here, but this would be the safest trade right here. So what are you waiting for? You're waiting for this to fill in this apex, and it's getting tighter and tighter and tighter. As long as it holds support here and holds resistance here, it's going to wind into an apex. Now, apexes generally don't go all the way to the end. They usually break out 70% of the way through, which means anytime now, the breakout is imminent. It could be right here, or it could be right here. Anytime. Especially since we've already bounced on this support once, twice, 3 times, 4 times, 5 times. Now we're coming down to do it again 6 times. Back here, we hit it once, twice, 3 times, 4 times, 5 times, and we bounced out. And then we hit it again down here just for good measure before we went up. So
Nico, that right there was priceless. I appreciate that right there. That helped me out. Also, your encouragement to stay in it and be patient, and also your explanation of your detailed analysis, or not analysis, but your detailed positions that you have taken. I can understand that now by reading that chart better. There was another question I was going to ask. Your signals that you have posted. I know the entry level would be different now, but can we still follow your place though, either in mock or in real trade? Can we still follow it even though our entry level would be different?
yeah, well, that's a great question. And the answer is your entry could now be even better than mine, because I'm still in a long and I'm negative. Because the reason why I stayed in it and I didn't close it out and I don't have a stop loss close by is because until we break out of this apex, I'm still hopeful that it's going to break to the upside. Now, if we break to the downside here and hold as resistance, then I will reverse these long positions, because that to me means we're going down. We're going down. I don't know how far down yet, but this is XRP. Let me go back to Bitcoin and I'll show you how far I think we would go down if that happens. See this support line on XRP? This is the same one on Bitcoin. We have an upward trending support. We're bouncing on it right now. And if we break that, then looks like we're coming back down to it right now, right? We're at 101.8 and we're coming down to it. That's that line. If we hit it, that's right around the $100 mark. But if I stretch this out, again, it's an apex, guys. It's the same thing that I just showed you on XRP, apex. And if we break to the downside of this and retest as resistance, we are probably going to go down. Where to? Well, this is the CME gap down here. And it just so happens to be where these two lines connect, which is the top resistance line of this falling wedge and the bottom support line. Look at that. Perfect. Boom, boom, right where these converge. Isn't that strange? Well, would that mean that this could go all the way over to here, fall through, hit here, yes, bounce, hit there, bounce, hit there, and boom, fill the gap and then bounce back up into this upward trending channel? That would be my hope. That would be my hope, guys, because look at how far we can get out of a resistance line before coming back into it. We did that a couple times, right? But that would be a far drop below this upward trending support that we've never gone for. We've never gone that far below, all the way from here back at 48K. We've wicked below it. Like here, we wicked below it and came back up. But that would be a very long fall. That would be almost a $10,000 drop from the line from 100,000 down to 91,000 to fill that gap. But that's where I think we could go. But there is another support level. There is another support level. You see this wick down right here? Let me just put a line right there and show you something. And let me just take that to the left. Resistance. Resistance. We broke to the upside, made a new all-time high at 112. We wicked down and touched it as support here. That is the 98K. And then we came all the way up to 123, new all-time high 124.5, new all-time high 126, and we came down and hit it right here, 98. Right there. If I put this precisely where it is, let's see, right about there. So we hit it once right here, and it is possible that we're just coming down to retest that, and that's all. That is possible as well. And that would be nice. I mean, I don't care if we hit I'm not saying we need to hit the CME down here. I'm just saying that usually they do get filled, and this one is the only one that hasn't been filled from way back here in April. This is a gap right here. You can't see it on this chart, but right here from 91.5 to 93 is a huge gap on the CME. And we've had like 6 or 7 of them since then. All of them got filled. This one hasn't, but it's kind of strange that we're on our way to it, right?
Do CME gaps always get filled? Like, could they get filled in a bear market afterwards later on?
Yeah, I would say 80% of the time. Bill, what do you think? 70, 80%? 80%? CME gaps?
65 to 80 is what the statistics are. 65 to 80%. And there's a couple real low, one at 54, one at 20,000. So it's possible that it doesn't get filled or doesn't get filled till the bear market. Yes.
Yeah, exactly. So it's possible it doesn't get filled. The odds are high that it will. 65 to 80% chance is, let me put it this way. If the weatherman on the TV said that there is a 20% chance of rain, which is what they do all the time. 20% chance of rain today. Have your umbrella. Why would you have an umbrella if there's an 80% chance of no rain? They always tell you that what the odds of rain is, but they don't ever counter that with the odds of no rain. So it's like they're covering their ass, because if it doesn't rain, then they can say, well, we said it was only a 20% chance of rain. But if it does rain, they'll say, well, we told you to bring an umbrella because there's a 20% chance of rain. So 80% chance, that 65% chance, still good chance. Now, but you're right. It does not have to happen now, but it is getting closer to it. And so could we bounce just again right here on this resistance at 98, where we hit it here, came to a new all-time high, hit it here. We did hit it right here. We wicked down to it, boom, and then we started to climb out, and we're hitting the downward trending resistance again, and we're coming back down to it. So yeah, we could just bounce right there and be out, and that would be fine with me. And then, I don't know, 3 months from now, 2 months from now, after we come all the way up and we hit a new all-time high, boom, end of December, we're at 140K and we start the bear market. And then we finally come all the way down to 91, CME gap filled, next bull market. Yeah, that could happen.
Nico,
Yes.
do you see a nice head and shoulder on 2 hours and 4 hours?
For Bitcoin?
Yes.
Yep. I do.
And also like the last like shape as you I see there. Normally when I see that I see a nice dump most of the time.
Hold on one second. Say that again, what you just said.
I see a head and shoulder, you say yes, and then you see the shape of a U,
This one right
glass
here.
figure. You see?
This one here.
Yes, normally when I see that, I don't know, it's normally follow a nice dump. And I don't know if it's happen all the time, but most of the time I see it. It's always
Well,
follow a nice dump.
normally that's called a cup and handle pattern. When you see a nice U and it comes up to the other side and it's even.
No, not this one. The
Oh, I
last.
know. I know. This is the same thing though. It's a cup and normally there's a handle and normally cup and handles break to the upside 70% of the time
But
and usually
the
to the depth
endo,
of the cup.
the endo like is below the cap, and most of the time when it does like that,
Oh yeah,
most
yeah.
of the time I don't say all the time.
No, this is invalidated because of the handle. So
Yeah.
handle whenever you see a cup and handle and it breaks to the downside, that's no longer a cup and handle. It never was. It's invalidated right there. Normally the handle is just a small little handle right here, and then it breaks to the upside, and it usually breaks to the depth of the cup from the handle to the upside, which would have brought it right, probably retesting this upward trending resistance or downward trending resistance. But it broke to the downside instead, so that invalidates that as a cup and handle. Good observation there. And then, but you do see a nice head and shoulders here. This is the left shoulder.
It's
Head,
sometimes that it
right
doesn't
shoulder.
break head and shoulder. Sometimes they don't break to the down side.
Yes. So guys, let me show you something. Thanks for bringing that up. Let's go to the help desk in our Discord, and then let's go to the pin messages, and let's go down to charts and candle patterns. You guys have access to all of this, so check it out. But these are reversal patterns and continuation patterns. And so like this is a bull flag, right? 70% of the time it breaks to the upside. So when we're showing you this and you see this, does it mean it's always going to do this? No. Just more likely 70% of the time. At 70% of the time, this bull falling wedge pattern breaks to the upside. 70% of the time, this bearish pennant will break to the downside. When does it not? That was the question. What does it always? And the answer is no. So here is a head and shoulder, and that usually indicates a drop to the downside equal to the distance from the head to the floor. What's the floor? The floor is this upward trending support line where the left shoulder started and where it just broke through the right shoulder. So where would that take it? If we just put that right there, well, look at that. It would bring us right to the bottom of this downward trending support line. Now, when would it not work? When would it not go down if it's a head and shoulder? If the head and shoulder is up against major support. So let's just say this head and shoulder right here was here instead. That's still a head and head and shoulders still tend to break to the downside. And if it does, that's going to bring us below this line about that far. But because it's up against support, this might be the time when it doesn't break to the downside. So 30% of the time, it will not do what they normally do. And it's usually like a bull flag. A lot of times we see bull flags, right? And bull flags tend to break to the upside, but not if they're up against resistance. Let me give you an example of that. Let's go back. So, yeah, I mean, technically this is a bull flag. And before all of this happened, it was basically just right here. Right? Flag, bullish. And this one just continued for a while. But they're not, they invalidate themselves if they just keep going down and they go down all the way equal to where the flagpole started. Then look at this one broke to the downside. Why? Because this flag was up against major resistance here, which was the upward trending resistance line. And so they don't always break to the upside. Now we do get ready for it too, like this one here. Here's a nice bullish flag, broke to the upside, still had some room. But then what did it do? It created another bull flag here, right up against resistance. And that one broke. Ultimately, it broke to the downside right here. And it did break back up. So, but look at it, could not get through this resistance line. So normally you would expect the bull flag to break to the upside to the distance of the length of the pole. So you take the pole, you put it here, and you're expecting this to break to the upside, and look what it does. It breaks down instead because it's up against resistance. So you don't, so the only time that these patterns, you don't want to put too much faith into them if they are up against support or resistance. Same with a bear flag. If a bear flag is hitting the bottom of support, and it looks like a nice bear flag, look at this one. Just pretend none of this exists. Here's the bear flag. Bear flag usually breaks to the downside, but it just hit support. Major support here. It wicked down to it, came back up into the flag. Everybody's expecting to break to the downside. It broke to the upside instead. Why? Because this is up against support. If it's a bull flag and it's up against resistance, generally does not break to the upside. It breaks back down. So that's the only time that these patterns don't usually do what we expect them to do is depending on where they are in the grand scheme of things. So keep that in mind.
Thank you, Nico. I also see on 15 minutes. Can you go on 15 minutes, please?
Yep.
Do you know what this sign, the last figure, is normally called? Like
This?
Yes.
That's a bear flag. So let's just do it like this. Let's just look at it like this. This is a nice little bear flag forming after a failed cup and handle. And on the lower time frames, there was a cup.
Yeah.
And handle. Let's just look at it. On the lower time frame, you can clearly see a cup and handle. But it broke to the downside probably because it's up against resistance somewhat. There was enough room there, I think. There was enough room for that to explode to the upside, but it didn't. And that would have brought us way above that, and it's not ready to break that resistance level yet. So that's probably why it broke down instead.
Hey, Nico.
Yeah, but hold on one second. This looks like a cup in hand. I mean, this looks like an upside down flag, so that's a bearish flag. But let's just go look. Is it up against, whoops, is it up against support? So let me just look at the grand scheme of things here. And I know I got a lot of crap going on here. Let me get rid of some of these other drawings so it's less confusing. Let's get rid of this. So it is breaking. Okay, so this is Bitcoin. We are in a downward trending wedge. It is breaking this little upward trending channel to the downside. And yes, that could break down. We could break down. It's got a little ways to go. Let's just take the handle of the flag, put it where it would break out. And where would that bring us? It would bring us right to this downward trending line right here. It would bring us right to it. So that could very well be where this drops to if we break out, which is right around, again, the 98, 97, 98K range. You know, but by the way, guys, let's go back to that flag and look at it. Let me zoom in. because here's another thing that could happen. Let me get this back. Just put that back as the flagpole right here. This flag could go on for a while. In other words, it could go like this and be longer. And instead of dropping here, it would drop from up here, right? And that would not bring it. You see, if it drops here, it's going to bring us down below this line. But if it drops over here somewhere, when it finally drops, will bring us right to that line. That makes more sense. So this flag could continue in this little channel for a little while before it finally drops. And look at down here on the RSI, it's looking exactly the same. So what I would think is that this could do this for a while, which is this, before breaking down. And is it possible for this to break to the upside instead of the downside? The answer is yes, because again, guys, these patterns that we share with you in the Discord are just what happens usually. When you see this pattern, this M pattern, 70% of the time it breaks to the downside. When you see this head and shoulders, 70% of the time, approximately. Not always 70 right on the nose, but approximately 70% of the time breaks to the downside. Rising wedge, bearish, breaks to the downside. Falling wedge, bullish, breaks to the upside 70% of the time. But that means that 30% of the time it doesn't. And there's reasons why, usually up against support or resistance, or could be it could be something else, but that's usually the reason when it doesn't. Go
Nico,
ahead.
on Rose's prior head and shoulders, if you could go back to that. I was watching that yesterday and the day before, and I was seeing an inverse cup and handle. Would that be incorrect assumption on my part?
No, it does kind of. This is the head of the shoulder, head, shoulder. And it does kind of look like it could be an inverted cup and handle. There's the cup upside down. Here's the handle, let's just say. Now it did break to the down. It did go up instead and then drop. That would be the cup upside down. And generally speaking, it's the depth of the cup from the breakout of the handle. Wow, that's interesting. That's right to where it went. So maybe this inverted cup and handle's over, but it's usually from the top of the edge of the cup or the handle here. So that would still bring us down to like 99, 98, right on the nose. Somewhere in there. If that were to continue down. But it's creating like a little bit of a bear flag now. This was a little weird. If this would have just broke down from here, I would say yes, absolutely. That was an inverted cup and handle. But the fact that it went up first and then dropped is kind of strange.
Yes, Nico. And like if you see the daily, it's like the daily is not that bearish, but those lower time frame bearish, but daily, like I don't know if you can go to the daily.
This is the daily, and we're still in an upward trending channel, but we are at the bottom where the support is. And this is a key moment here, guys, because it is bearish technically, because even though the overall trend is up, we are in a downward trending falling wedge. But falling wedges, let's look at them. Falling wedges are bullish.
Yeah.
So does that mean it's going to break to the upside? No, but they usually do. And I can all we got to do is zoom out and look at all the other times. Hold on one second. Here's one right here. Major falling wedge. We broke to the upside, pumped way up. Here's another one. Broke to the upside. And they're all inside of this overall upward trending channel. And it just so happens that we're in one now and we're already at the bottom. This blue line is the bottom. The only reason I have this cone coming down lower is because this is the CME gap here. And if it does break below this blue line, that's probably where it's going to go next. If it can get through this 98K support. There was resistance and support here already, right? And if we bring this over and just keep going over, there was resistance here, support here, resistance, 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 support, resistance, resistance, going all the way back to November of last year, a year ago. So resistance, a little bit of support, breakthrough, resistance, resistance, support, support, resistance, 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 support, support. So it is a major support and resistance line. So I'm hoping we just bounce on it right again just now. I hope that's what happens right here. Maybe we'll wick down to 98K. We're at 1015 right now. Bounce again and come back up into this channel. That's what needs to happen. That's happened before here, where we wick down to it and we came up and then dropped back down again and hit it again. We hit it here. Boom. We went up. We may drop back down and hit it again. Let me get rid of some of this other stuff so it's easier to see. But yeah, what were you going to say, Rose? Was that Rose talking or someone else?
Yes, I was looking at it. I'd say maybe we might go to 96 first before we come back up, or we just bounce from here on the daily. But on the lower time frame, it's look very bearish to us with that head and shoulder and other stuff.
Yeah, I would stay off the low time frames for the time being because we're so close, guys, to this line. This is a bigger, like, let me just put it this way. The people with the bigger money, they're not looking at the 5 minutes, the 10 minutes, and those really low patterns on the low time frames because of where we're at in this bigger picture right here. Because you could have a head and shoulders on the 10-minute right here and not even see it on the daily. Because we're so close to this. And that head and shoulders may not do what it normally does because there's no room because we're up against support here. So instead of breaking down, maybe it's just going to bounce here. So I would just wait to see on that.
Okay. Thank you, Nico, for taking your time.
Oh, you're welcome.
Thank you.
I would just wait to see, guys, because we're just too close to whenever we're winding into a wedge. I mean, keep in mind, we're in this upward trending channel. The only reason it's a wedge is because I drew a line here. And the only reason I drew a line there is because we had a high, which is the all-time high right there. Highest Bitcoin's ever been right there, 106. And then we came down and we came back up and made a lower high. So I draw and connect those. And then we come down further. We make a low and then we make a lower high and then a lower low. And then we come back up and stop. So if I just keep that line going, boom, boom. Now we have high, lower high, lower high. And then if I just connect it right to the floor where it keeps hitting support, we have an upward trending support and a downward trending resistance. That's called an apex, a wedge. We're winding into it. It's either going to do one of two things. It's either going to break to the upside and we're going to go long, or it's going to break to the downside. And I'm still questioning whether I would go short. I might just wait for the bounce down here and go long. But I mean, that is a long ways away. Don't get me wrong. From here to here is a long ways away. So I probably would go short. But until that happens, I'm not going to bet that that's going to happen right now. But I do have this coming right down to that point just in case. And if I go to let me just go do something real quick here. Let's just go to my channel. I just want to show you this. This is kind of funny. This was posted a day ago, this video. And I wanted it to be posted earlier before it actually happened. But if I go to sharing my screen here, and let's just listen for a second. Support and resistance going all the way back. But let's just do it right here for the time being. That was support right there at 107. We bounced on it and we went back up. So I'm just gonna bring this over. And if you'll notice, guys, we have some support and resistance happening. So as we were falling down this wedge, right here, 112 zone, that was major support and resistance. And then we broke through and retested and then dropped all the way down to here. And now we're retesting this line right here. So that, as you can see, was support and is now resistance. Okay, so support resistance. Now, if we continue in this downward trending pattern, I'll just keep bringing this down all the way to right about there. There's a reason I'm gonna bring it down to there, and I'm gonna show you if I bring this down to here, what that means. So if I zoom out, I am on the 1 hour time frame, but what I want to show you guys is right about here, we had major support down here, right there, and that is at the 98,000 range. Let me just bring that forward, and I'm gonna just leave that right there. As you can see, that is a possible support level. I'm gonna go up to the daily time frame and just show you why I'm putting all my lines here and what I think is about to happen. So now if I do this, guys, I'm gonna show you something. Before we start trading, what we do is we look for support and resistance levels. This is a resistance level going all the way back here to back in December of 2024, when we hit right here at 108K. We dropped down to about 89, 90K, came back up to 109, and then we fell in what is called a falling wedge. I'm showing you this for a reason, is when you understand how to draw support and resistance lines on a chart, and you understand where support and resistance is, then you can just simply go up and mark this up. See where we came down to here? Boom. Let's just bring this all the way over. That was previous resistance. This was the all-time high at 73.8. We broke through it and we came down to retest 74.5 before we break out and we come up and we have a new all-time high at 112. So I'm going to draw a resistance line right there at 112. And then you can see we finally broke out and we retested 112. When we broke out, we hit an all-time high at 123. We bounced on 112 at 124. Bounced on 112, went through resistance, dropped down to 107. Came back up, hit 112 as resistance, broke through, held as support, and then bounced again. And then went all the way up to 126 and then bounced again at 112. This was the big drop on October 10th that brought us all the way down to 1015 on Bitcoin. This was the big heist. We bounced above 112, but did not make a higher high, and then we dropped back below. So now we are coming back down to retest this level here. This is the major support and resistance level. And I will tell you this, guys, when you understand where to draw your support resistance lines, resistance, 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 breakout support, and boom, that will be retested soon. Okay, so I think we're going to this level down here at 98.5. As you can see, I'm in 3 open positions. I'm short Bitcoin on the Bitcoin margin, short Bitcoin on the USDT margin, short XRP right now. I'm up about $1,800, and we're going to drop all the way down to the 97 and 98 range. But if you want to stop. So guys, I mean, I called that exactly what happened. That's what happened. And we did that exact same thing. We dropped down to the 98. This is up here somewhere when I shared that. And when I took this line right here from the previous, when we hit 112 here, what I was showing you there is bringing this over and basically hits that 98K. And it's all of these things, these fractional, algorithmic supply and demand zones all matter, and they all mean something. It all comes to the points. And that's kind of where we're, I said we were headed. We were up here. I said that's where we were headed. That's what we hit, and we bounced. And now we're coming back down to retest it. And the only difference between then and now is that if we bounce and break out, then we possibly have a good run up all the way back up to the highs. But if we break to the downside of this, then it is possible for us to go through that 98K. And if that happens, then the next logical support and resistance level is here between 91 and 93, because not only was it previous resistance and support, it is where the gap is on the CME. Might as well take care of that while we're down there. And that's only if we break this 98K though. If we bounce on the 98K, we're coming back up.
Nico.
Yes, sir.
So okay, so I purchased in at 103, and it's been coming down, and I bought more in at 102. But if it continues to go down and it goes below it goes below, and I reverse my position, does it reverse my position to a short based off of where I bought in or based off of where I reversed my position at in Phemex?
So if, like, for instance, I'm long right now.
Right.
If this drops all the way down to here,
Mm-hmm.
or let's just say I reversed my position. Like right now, I'm already negative, right? It already dropped below my long. And right now it's right here, which is 101.4. But I went short. I mean, I went long at 102.8. If I click this right here and reverse my position, it's going to re-enter me short right here. It's going to close out this position and re-enter me short here at wherever I reverse, wherever the price is when I reverse it.
So you take a loss on that part of your trade.
I would take a loss on this one and it would re-enter me short on this one at the current price. Now, if I was profitable, let's just say I went long here, right? Like I did. Let's say it was right here. I went long and the price went way up to here. And then I clicked reverse. It would enter me short up here.
But you would take a profit.
It would close out this position. What it's doing is closing out the previous trade, whether you're profitable or loss. If you're a loss, you're going to take the loss. It's going to show up in your account. If you're profitable, that profit goes into your trading account and it immediately enters you in the opposite position. The only time you do this and it doesn't work, well, first of all, by the way, keep in mind that when you do a reverse of a position, your stop losses and your take profits go away. You can't possibly be in the, you're entering a different direction now. So your stop loss is going to be, you're going to have to re-enter your stop loss to wherever you want the new one to be. And you're going to have to re-enter your take profit target wherever you want the new one to be. The only thing that immediately flips is the entry. Does that make sense?
It makes sense. The entry and the amount of contracts that you have in it, correct?
Everything that you already had set for this one that you're reversing stays the same. So if you had 2,000 contracts at 10x leverage, your reversal will be 2,000 contracts at 10x leverage.
Okay, I have a different question.
Hold on, but before I finish that will only not go through if that was like if you took a big loss on the one that you're reversing and you're reversing it to go the opposite direction after taking a loss, the only way it will enter the reverse position is if you had enough money after the loss to cover the new entry.
Okay, I get that. So yeah, the other thing, when I was working in mock trading, I could set contracts and contract size. And then when I went into the regular futures account, I can put in my dollar amount or my Bitcoin amount, but it doesn't, I can't set a contract size. And so I've had some profitable trades in both mock and regular trading, but so one of my last trades, I made like 63%. It wasn't a very big trade. It was like 15 bucks I made, but I had 16x leverage, and I don't see it any place in my account. Because my assumption, and correct me if I'm wrong, if I had 16x leverage and I made $15, my 60% on 25 bucks, then I should be my total profit should be something like $240. Is that correct?
All right. So how much did you have on the position that was your margin?
My margin was $25.
$25.
My profit was right around 60%, and I had 16x leverage.
Okay. So I'm glad you brought this up. So let's say, was it a long or a short?
I don't remember. I'd have to go back and look. I think it was a long.
So it went up how many percent?
My profit was about 60%.
60. And you were at 10x leverage?
16.
Okay. So what is, let me, before I do that, let me pull up the calculator and show you guys. What is 60% divided by 60% divided by 16 leverage, you said? I'm sorry.
16, yeah.
Divided by 16. That means that the market moved 3.75% in the direction that you wanted to, 3.75%. And you made 60% because 3.75 multiplied by 16x leverage is 60%. So you made 60% on a 3.77% move in the market. If you had $25 margin, then times 3.77% times 3.75%, let's just say,
Right.
would have been 93 cents.
I get it.
Times 16x leverage, you would have made $15.
I get it now. Thank you.
Yeah. So what some people get confused is not the margin, but the contracts. So let's look over here on this trade. I'm long 16x like you, but I have 3,389 contracts. But you take 3,389 and divide it by 16, and that's $211. That's my margin that I have on this trade. That's what I'm risking. So if this went up 3.77%, then I would take 3.77%. I would take my $211, 211 times 3.77% equals $7.95 multiplied by 16x leverage. Multiplied by 16, I would make $127 on that trade. And so that would be, out of $211, that would be 3.77 times 16. That would be a 60% gain on a 3.77% move in the market.
I understand that now. Thank you.
You're welcome. Guys, this happens a lot. And in fact, for me too, back in the beginning when I started, a lot of times we're thinking we should make a lot more, but it also depends on how much money you're actually risking as in your margin and what the actual percentage gain was. Because the leverage that you have is not based on the contracts, it's based on the percentage move in the market. So if the market moves 5% in your direction and you close that trade out, then you made, if without any leverage, you made 5%, whatever your margin is. Mine here is $211. If I had no leverage at all, I would make 211 times 5%. That's all I would make on that trade, which is $10.55. You take whatever what you multiply that by your leverage, whatever your leverage is, and that's how much you make on the trade times 16. So on that, I would make $168 instead. But without leverage. So what the leverage is doing, guys, it's increasing, it's multiplying your percentage gain by the X number of leverage, not the money that you have, your percentage gain. So whatever money you're risking, multiply that by the percentage gain and then multiply that by the leverage. Does that make sense? I know it's sometimes you got to hear it 20 times and actually do it 20 times for it to click, but
can you say that again?
It makes sense. Say it one more time, please.
yes. So now this gets very significant with more money. So let's just say I have $1,000 in my margin down here, like this one right here on my Bitcoin long here. I have $2,397. So let's use that example, $2,397. And the trade goes up 5%. If I have no leverage whatsoever, I'm spot trading, I will make 5% of $2,397. So you take $2,397, multiply it by 5%, and I would only make $119 on that trade without any leverage. But I'm at 7x leverage. So you take the 119 and multiply it by 7, and that's how much I would make on that same 5% move. So really that's 5% multiplied by 7. So that's how much money I would make, but let's just take the percentage. 5% times 7x leverage equals 35%. So I'm making a 35% gain on a 5% move because I'm at 7x leverage, and 7 times the percentage gain. So whatever the percentage gain is multiply that by the leverage. Now let me show it to you this way. Let's just say I have the same $2,397 at risk, $2,397, and this goes up 5%. That's times 5%, just like before. That's $119. But let's just say this time I'm at 75x leverage times 75. I just made $8,998 on that same little 5% move. In fact, that's 5% times 75. So I made 375% gain on a 5% move. This is what you see when you're looking in the at the wins wall in our group. You're seeing these ridiculous gains. 434%, 1,600. Actually, I'm sorry, that's 1,600 XRP. Great job, Zach. That's killer. So that's like 3 or 4 grand you made there. But when you see these ridiculous gains, guys, 500% here, just do the math. All you got to do is look at this. This was the open price. He went long at $2.27, closed the trade out at 242. So how do you know what percentage that move was? It's real easy. You take the 505% that he made, 505%, and divide it by 50x. That's 10% move in the market. This moved 10%. XRP moved 10%. And because he was at 50x leverage, you take the 10%, multiply it by 50, and he made 500% gain.
Is there a calculation for the Phemex fees?
Yeah, so when you're trading, guys, you can also, before you actually enter the position, you can come up here to this little calculator at the top right up here where you actually enter your trade. If you want to do this, be on isolated, pick your leverage, market order right here. There's a little calculator. And you can predict your profit based on where it goes, how much the size is, entry price, exit price, how much you would make if it hits that target, what the fees are, everything. Target price, liquidation price, all that. Whether you're long or short. Now, fees. I'm in a trade right now. I'm in 3 trades right now. Here's my leverage, 16x. There's the size, 3,000 contracts. I'm risking $211 margin. My unrealized P&L, I'm negative $46 on this trade, and realized P&L. This is my factored in fee. If I close this trade out right now, I will lose $48 because that's what I'm negative on the trade, plus another $2.50 for the fee. Now, if this was $1,000 in profit and I closed the trade out, it would be $1,000 profit minus the $2.50 fee. If I close all 3 of these out right now, I'll lose $1,444.34. And I believe these fees are actually factored into that. I believe it's already built in.
No, they're not.
They're not? Okay.
No.
Wasn't sure.
Yeah, I hate how it says total P&L, but total P&L should have unrealized plus realized to equal total, but it doesn't.
Okay. So I wasn't 100% sure of that. So I was just about to say 1442 minus these fees. You know why I don't know, guys? You know why I don't know is because I don't care about those minor fees. It's just like when I go get gas. My mother, she's 84 years old. She calls me up. What's the price of gas down there in your area? I have no idea. I don't care. Why? Because I need gas. So when I go to the gas station, I don't say, oh my God, it's $2.37 a gallon. I'm going to go up the road to where it's $2.20 a gallon. No, I just fill up my tank because I need the gas. Why? Because my time is more valuable than saving 10 cents a gallon to go to another gas station up the road. My mom, on the other hand, who has nothing better to do, she will drive 10 miles away to buy gas that's 20 cents per gallon cheaper. That gives her something to do. But for one thing, I asked her, I said, how much did you save? Well, if she's putting, let's say 20 gallons in her tank and she's saving 20 cents a gallon, right? We can do the math. So, to some people, 0.20 times 20, that's $4. To me, I will pay someone $40 to bring the gas to my house so I don't have to even go to the gas station. If that was a service, and I believe it is, I believe there are people that will do that. I believe there is a service out there. that will bring the gas to you, that would be worth it to me, because it would save me time from having to go get gas. So it's all relevant, guys. So a lot of people trip over these little fees over here, but I will tell you this. If you want to know what the fees are, go click the Phemex button in the upper left corner. Go scroll all the way down to the bottom of the website to support down here, and then go to fees and conditions. Fees and conditions, standard futures. Mine is 0.009 maker fee and 0.054% taker fee. Pretty low. Cheaper than Fidelity and E-Trade and all those other ones. Now, can that get big? Yeah, sure. I mean, if you're in a long position from 15,000 in Bitcoin, and let's say you have a whole Bitcoin on the trade. Listen, I know a guy who he had $3 million in a trade, and he was up 1.36 million on the trade because he was in the trade for like 4 months, like literally in a long position for like 4 months. And he was up $1.3 million. And when he closed out the trade, it was $36,000 fee, holding fee. But it's because it's a percentage of not only the amount that you're trading and risking, but also the holding period. Because every day that goes by, there is a holding fee. In addition to these maker and taker fees, those fees go up a little bit the longer you're in the trade. I don't know what the daily amount is exactly, or the percentages, but it's very small in comparison. So in other words, would you close out a $1.3 million profitable trade knowing that it was going to cost you 30 grand? Yes.
Of course.
Of course. It's a no-brainer. You made 1.3 million. The cost of doing business in that situation was 30 grand.
Hey, Nico.
Yes.
I was wondering, you gave a breakdown of where you think Bitcoin will go if it breaks down out of that apex. Could you possibly show us the same thing of what you think XRP might do if it breaks down out of its apex?
Yeah, I think I went over it, but I think that this will probably be the low right here, would be right around 91 to 93 zone. If it breaks, well, you mean if it breaks out of this apex, this whole thing down here, and goes lower?
On XRP.
Oh, just on XRP. So XRP is correlating with Bitcoin to a degree, and the degree is about, let me just go back to XRP and show you. If Bitcoin does that and it drops down to 91K, that is about a 10%, I mean, a $10,000 drop in Bitcoin. So here's XRP right here, $2.34. Look how far XRP dropped during that big drop, down to $1.26, give or take, $1.25. So even though we do have some upward trending resistance here, I would say that's it right there. I would want to touch as many of these support lines here. Maybe $2, $1.99, somewhere in this range right here.
Awesome. Thank you.
And it probably would just be a wick down like what you're seeing here. And then back up, wick down, back up, wick down, back up, wick down, back up, wick down a little bit, back up.
Nico, do you think the approval of these ETFs for XRP are going to affect price?
Yes. Some people say, oh, well, the price is probably baked in. BlackRock or Grayscale or one of these hedge funds probably already bought billions of dollars worth of XRP. And as soon as these ETFs get approved, they're just going to buy the XRP from either BlackRock or Grayscale or on the other, on the private ledger or directly from Ripple or whatever. And that can and probably is going to be the case. So why would that cause the retail price to go up if that's the case? It may not right away. But let me give you an example. Go back to Bitcoin. So right here is when the Bitcoin ETF got approved, 73K. Actually, we were coming up. This is what happened, guys. I don't know if you remember, if you were with us long enough, you remember, but the previous all-time high was right here, 68,000 for Bitcoin back in 2021 in the last bull market. And we came all the way back up to 68K. Right there. Boom. As soon as we hit it, we dropped all the way back down to 59K. Big. We ran right up. I mean, we came up here and we had an all-time high at 64, or not an all-time high, but we had a new high at 64. We retested. We bounced here for some reason. This was nothing yet because this was right here. And then we shot up and hit previous all-time high. And then we came all the way back down and bounced and slowly climbed up and hit it again, hit it again, hit it again. And then what happened is that they announced that the Bitcoin ETFs were approved. There were 13 hedge funds at the time, all applying for ETFs. And they announced on the SEC Twitter channel that they were approved. And boom, price shot up to 73. But guess what happened? Then the SEC said their Twitter account was hacked and that they did not approve the Bitcoin ETFs. Their Twitter account, do you guys remember this? It was crazy. They said that their Twitter account was hacked and they did not approve it. And then boom, Bitcoin dropped all the way down to here. And then a week later, they did approve it. They finally did approve it. And boom, we shot back up above to 71.6, but we never got higher than this 73, even after approval. And then we went into this 280-day giant bull flag, downward trending channel with lower highs and lower lows, but only until we retested here at 49K. What was the significance of that? Well, that was previous resistance on the way up. And then we bounced out. And then, of course, guys, as you can see what happened, we broke out, retested, hit that 73K, and then busted out and went all the way up to, well, first new all-time high, 93, then 99, then 104, and then 108, and then 109. So you can't say that the ETFs didn't help, but it did take a while for it to happen after they were approved. I would say from April to about October, 5 months. Then we shot to a new all-time high. So did that have anything to do with it? Well, there's going to be, supply shock, but whether it's going to come from the retail market or not, but just the fact that they get approved is going to put into effect a domino effect of a lot of other things happening. So I think the price will go up, maybe $10, $15, $20, which is still huge in comparison to where it's at now. But Bitcoin jumped up almost, let's just see exactly. After the ETFs, it did shoot up 68%. So if XRP even goes up 68% in the next couple months, what would that bring us? If they get approved and we're down here, let's just say we drop down to 220. 68% would bring us up to 370, which would be a new all-time high, probably right in alignment with this whole upward trending channel. Crazy how that works. But it's a little different, I think, for XRP because it's not one of those situations like Bitcoin where there's a finite supply. Yes, there's way more XRP, and that's where a lot of people get hung up on the whole market cap. But it's about utilization. It's about what it's being used for and what the transactions have to what the price has to be in order to handle the volume of transactions on the Ripple network. And institutional adaptation. So once these institutions start, turning on the ETFs, and then there's the derivative markets, then there's the settlements, there's, blockchain financial settlements and all the banking institutions, all that stuff. If all of those catalysts happen, I don't know. I think $35 to $50, mark my words, $30 to $50 in the near future. That's what I'm thinking. Now, if it goes beyond that, great. Is it going to get to $1,000 someday? I think so, but I don't know when. Could be sooner than later, but I think $30 to $50 is certainly doable. And what would that mean to where it's at right now? I mean, that would be an 8x from where it's at right now. All right. What happened to my calculator? So we're at $2. Well, right now we're at $2.30, but 8x, that would be $18. Is that doable? Yeah, I mean, Bitcoin 8x in this bull market, went from 15.5 to 126. I think that XRP right now at this price, guys, under $3 is like buying Bitcoin at $13. That's my opinion. That's my comparison. And so if all the things that are promised or on the horizon and possible for XRP happen, then it could be a $10,000 XRP, $25,000 XRP, $100,000 XRP. Would it be delisted if that happens? Maybe. Would it be institutional grade money? Could there be a supply and problem? Yeah, there could be all kinds of things. Could your XRP get confiscated for government use only? They'd have to buy it from you. Hopefully at whatever the current value is. I don't have all those details. I don't know if that can happen, but I'd rather have it and worry about that problem than not have it at all if that price appreciation happens. All right, guys. Yeah, go ahead.
Guys, a quick question. This is something I heard a couple of years ago. Actually, for some reason, caught Rick Santilli, one of the few guys I listened to on CNBC. He talked about Bitcoin, and he talked about a 51-day cycle. And I kind of tracked it for a while on my phone, just like had an alarm go off a couple of days. It has like a 1 to 2 day plus and minus. So I just kind of just punched it in, like coming back to say April 12th. And if you look, it kind of goes up every 51 days, give or take a day or two, and it tracks all the way to the 126 high. So I mean, I'm not sure. I mean, I thought I heard you talk about possibly a couple months ago. I'm not sure if you were ever aware of it, but it was something I kind of kept track on just as it was trading in and out of things, and especially, I mean, it might be beneficial getting in and out of things, making some short trades and things.
Yeah, let me just announce real quick, guys, that today is Wednesday, and right now at 2:00 is Bill's basics call starting right now. He put the link in the Zoom chat, and he also put it in the Discord, in the main chat and Discord, in the main trade chat right there. I think somewhere there it is, basics, and then also in the announcements channel right there. So that's starting right now. I highly recommend if you're brand new to get on that. I'm going to end this call in about 3 minutes here, guys, because I have another appointment. But to answer your question, yeah, obviously, I think that there are some cycles in it. There's a 4-year cycle that goes probably back 150 years for the stock market, and it's working for crypto as well. But right here was March 2024. Right here was January 2025. How many days did you say?
I thought he said it was 51, if I remember correctly.
All right. Well, let's just look at the top here. I think that was around October 7th. And if we go back 50 days, It's 50 days pretty much from that top to that top.
Yeah, I mean, I just went back to like April 12th, and then it started ascending down to a dip, up to a top, down to a dip, up to a top. So it's kind of interesting. Something like I said, I tracked it a couple of years ago for almost a year. We'd get in and out of things.
Yeah, I'll have to look more into that. I think I've heard of it, but I didn't see the core. I didn't really see it because like what I just tracked right there was 50 days from this top to this top. Definitely.
Yeah,
I
yeah,
didn't really look at, let me
yeah,
just see if there's a correlation between this is 62 days, about, yeah, maybe about 50 days from that top down to
yeah,
the bottom.
yeah. It does have, like I said, a plus. From my experience when I tracked it, I had like a plus or minus 1 to 2, maybe 3 days at the tops at the most, like margin of error a day or two early or a day or two later. So it was just something, like I said, if it helps people get in and out of trades and make some
Yeah,
money.
that's interesting. I'll have to look into it for,
Yeah, thanks for listening. Appreciate it.
yeah, no problem. This is about 60 days from this bottom to this top right here. So there is something to it in a very close range. We got about 60 days. Let's see. Just looking at these breakouts, that's 55 days from the breakout to the top. That's interesting. Even without knowing the days, I can see the support and resistance levels. But it is interesting that that does work out to be close to 50 days there on those peaks and those valleys. I'll have to look into that more. If you want to get on Bill's basis call starting right now, guys, you can ask him that about that too. He can definitely, because Bill is more of an analyst guy, and he will definitely go back and prove that. He will look at it going back and get the data to back it up. Guys, I'm very simple. I don't know everything. I'll be the first to tell you. And it's kind of like this iPhone right here. This iPhone, I make calls on it. I text on it. I check Facebook, Instagram, things like that. I can find the emojis. I can look at my email. But this phone probably does 1,000 other things that I don't know how to do. It can probably do a lot more than I'm using it for, right? And I don't even care. So my point is that trading, there's a million other indicators that you can use that I don't use. And it's not that they don't work. It's just that after years of doing this, I've deduced it down to what I need. I don't want to be bogged down with all the different gadgets. I used to have 16 monitors, 16 small ones. It was ridiculous looking, but that's how big they were back then. And I just thought it looked cool. But I make just as much money on my phone at a red light in the car as I do on my desktop computer. Once you know what you're doing, it doesn't matter. You don't need all the bells and whistles and all the tools. I guess my point is that there are a lot of ways to measure, a lot of things that you can do to add that might be helpful. I will say that market cipher is helpful, especially if you're new. But once you get to the point where you're predicting what you're predicting by looking at a chart, you're predicting what market cipher is telling you, and you already saw it before you looked at market cipher, then you don't really need market cipher anymore. It just, all it's doing is confirming what you already know. But until you know it, it's a very useful tool. Support and resistance. Sometimes I can look at a chart without any lines on it whatsoever. And let me just show you this real quick. I can just look at this. Yeah, if I come onto a brand new chart and it looks like this, I can see the matrix. I can see right through this. I can see where the support and resistance lines are. If I had to draw it up, I could draw it up exactly the same as I have it right here in about 30 seconds. But once you see it all, you don't really need all the tools anymore. You can just look at it and see where the peaks and the valleys are and kind of draw your support and resistance, and then come up like, in fact, what I'll do is real quick, I'm just going to get rid of all of this, remove drawings, and just what I would do if I first saw this is I would just first draw this upward trending support, and I wouldn't even care about all this back here because that's already happened, but I will draw this right here because that's an obvious downward trending resistance. So we have an edge, a wedge, an apex right here. It's real simple. It's clear to me. I don't need this to even go past that, but I know that once it breaks out, it will. And then if I want, I can either draw this upward trending channel line right there and just keep that like that, or extend it out, because that's probably where we would continue to go Once this breaks out here, it probably up here somewhere, right? And continue this upward trend. But see, I mean, it's already there. If I just keep going back with it. Interesting. When we break out of things. So you don't really need all the things you think. Now down here we got some indicators. Now I do use the RSI, and there is something interesting happening on the RSI right here. Let's go. This is on the daily, guys. Let's look at this. We have downward trending resistance, and we have a floor. And on the RSI, we have a floor, and we have downward trending lower highs, and we did break out. On the RSI, we broke out of this downward trending lower highs, and we're retesting right now. Could it fall back below, or is it about to bounce here? Because if that happens, guys, that means we could just bounce where we're at right now on the price. And finally break through. But I'm not going to guess it. That's going to happen. I'm going to wait to see that it happens. But this is an indicator, and it's lagging, and it's telling me what could be happening. Now let's just look at the stochastic RSI. Well, this is interesting because on the stochastic RSI, the blue line has crossed the orange line to the upside, and that's bullish. But look at this. We got the blue line crossing back down, getting ready to cross down over the orange line to the downside before it even got up here into the overbought section. That's bearish. Now let's go to the higher time frame. Go to the weekly. The weekly on the RSI. Look at this, guys. The blue line crossed the orange line to the upside, crossed it back to the downside, dropped below the dotted line, went down, started to come back over, and then dropped further, going away from the orange line. Where? Right here. Bearish on the weekly. Let's look at the regular RSI. Regular RSI on the longer time frames is still downward trending. Nothing's changing really. That's called bearish divergence. We've had that for a little while, and we've had that for a while, guys, where we've had highs on the price right here, 73, right there, 108, 109, 112, 123, 124, 126. Price getting higher and higher and higher. RSI getting lower and lower and lower. Bearish divergence. What does that mean? Well, only back here in the last bull run, it meant something. Here was the high, higher high, higher high. High, lower high, lower high. Bearish divergence. Back here, it was the beginning of the end. And then we had another lower high and a lower high here. So this was the only time where back here we did not have a higher high. Here we keep having higher highs. High, higher high, higher high, higher high, higher high. High, lower high, lower high, lower high, lower high. But if we break this upward trend to the downside and this purple line right here gets lower and lower. Hold on a second. Down to this level, I would say, well, I have this here for a reason. Let me just put it up here. We're coming there right now. We're getting there. Let me just show you what happened last time we were at this level. This is right here is where we broke through. And we came up one more time to retest. And we did not make a higher high. And that was the beginning of the bear market. So I'm not saying we're going to a bear market. I'm saying what has to happen in order for us to not go into a bear market is we need to stay above this line. The price needs to get bounce here at the 98, it not go back below the 98 and this upward trending support, and it needs a break out of this downward trending resistance to the upside. And we have time. I mean, we have a month and a half on the 12-month time frame. We have a month and a half of this bull market to December 31st. So we have, and by the way, throughout history, every bull market cycle, November and December are the biggest bullish gains. If we just go back and look at the 12-month time frame. So there's no reason for me to think that we're going to a bear market right now, but If we break this line and start dropping down into the low 90s, and we break this line and we retest as resistance, yeah, then this 126 could have been the top. We just don't know it yet. Is that possible? Yes, everything is possible. Is that a bad thing? No, we'll just short it and we'll make a shitload of crypto on the way down. We'll make money on the way down.
Is there any signals on market cipher where it's headed?
Yeah, let me just hold on a second before I switch that screen over. Let me stop sharing this. Put this up, go back over here, and then so on TradingView, on Market Cipher, we're on the weekly, and Market Cipher is money flowing out. So guys, when we look at this on the weekly, we've already cut through the EMA ribbon to the downside. We are in the Gaussian channel. I'm on the weekly. Let me go to the 5-day. We've cut through the EMA ribbon to the downside. That's bearish. We got below it. We retested underneath it. We haven't got back above it. We're bouncing on the center line of the Gaussian channel. That's okay. That's good if we bounce out like we did there, or here where we bounced out and got back above the EMA ribbon. But that's happened 3 times this bull market cycle. 1, 2, 3, and this is the 4th time that we're in it. But 3 times we bounced out. First time ever that's happened. Because prior to that, guys, when we get into the Gaussian channel and we hit that center line, we generally don't get out, and it turns into a bear market. We hit the center line, we bounce, we can't get out, and we're bear market. We hit the center, we come out, we hit the center line, we try to bounce out, and we can't get out, and it's a bear market. Every time. I mean, when you look at the Gaussian channel throughout history, usually when we get into it, we're above it, we're above it, we're above it in a bull market. And as soon as we cross the EMA ribbon to the downside and hit the Gaussian channel, we get sucked into it like quicksand. And so far in this bull market, we stayed above it. We bounced on it here. We bounced on it here. We bounced on it here. And every time we bounce on it, we make a new all-time high. We get below the EMA ribbon to the center line on the Gaussian channel, bounce out. Below the EMA ribbon, bounce out. Below the EMA. So we got to bounce, guys. We got to bounce. I'm bouncing, as they say. We got to bounce here and get back above. And we certainly can. And we have, like I said, we go to the 12-month time frame. We got 1 month and 20 days left of this candlestick. This one that we're in right now. And listen, I'm not all about, just making everybody feel good to tell you what you want to hear and that we're going to 500,000 Bitcoin or $1 million Bitcoin this bull market. I'm going to tell you like what the charts are telling me. Doesn't matter what I think, what I want. I'm talking about what the charts are saying and what the charts have repetitively said over the years. And that is that the 4th candle on the 12-month time chart has always ended up being the top of the market. So here's the bull market top, 2013. 1, 2, 3, 4. 4 years later, 1 year, 2 year, 3 year, 4 year. That's the top of 2017. 1 year, 2 year, 3 year, 4 year. That was the top, 2021. 1 year, 2 year, 3 year, 4 year. We are in the 4th year candle, and we have 1 month and 20 days left. When the next candle starts at the end of this year, in 1 month and 20 days, the next candle will start. Whatever this candle is, historically has been the top. Does that mean that this time it's going to do the same? Well, I mean, guys, are you going to bet that it's going to do something different than it always has? I'm not. If it does different this time and it goes through the moon, I'll be happy. That'll be great, but I'm not going to bet that that's going to happen because it never has yet. The 4th year of the bull market is usually the top. Now, here's the thing, and Chad and I both agree on this. He may not agree with everything I say up to this point, but we both agree on this. This time can be different. This time might be different. I don't know if Chad's on this call or not, but this time could be different.
Nico, I'm on the 4 hour and I was looking, just glanced back at Bitcoin and it looked like it just dropped. So I don't know what average you're on or whatever, but if you could recheck it real quick and see if it wicked below the Gaussian channel again, because well, on the 4 hour it just
Yeah, I'm on.
printed a new candle.
Can you see my chart right now?
Yeah, yes, sir.
Yeah, I'm on the 4 hour right now, and we are way below the EMA ribbon, and we broke below this. This was a major support level here as well, and this was a more of a local downward trending resistance here as well. We just broke out of that. A little wedge to the downside, and where I said we might be going is to retest the 98K, which is somewhere right in here. Yeah. Yeah, it's at 101 right now. So we've been kind of at 101.5 or so during this call quite a bit, but that's kind of where we're at. This is where I think we could go, guys. Today. Somewhere back down to here. 98. That's a nice bounce area. But is it going to bounce? That's the question. If it doesn't bounce, where can we go after that? Right here. Well, that's where I think we're going right here. Where can it go if we don't bounce there? Right here is the CME gap. I'm just going to put this as a range right about here. I'm not saying that we're going there. I'm just saying that there is a CME gap right here, and we have not closed that out yet. So that's where it would go if we break this 98. So this 98 right here. Is the first support, the next support, and we could just be coming down to triple bottom on it right now. We hit it here, boom, hit it again here, boom. We hit the top downward trending resistance here, and we might just be coming right down to bounce on that and then break out. That's what we need to do. This is a falling wedge, guys, and falling wedges are bullish, but they're only bullish after they do what they need to do inside the wedge. So back here, we had a falling wedge. Let's just look at it. Very similar.
Thank you, Nico, by the way.
No, you're welcome. This falling wedge right here, guys, looks very similar to this one. I can make this look identical. I mean, it really is very similar, depending on where you put the bottom support resistance line. So we had three highs over here. We had 123, 124.5, and 126. Here we had all of these were all-time highs, by the way, guys. Right here, 93K right here, all-time high. And then we made a little higher, and we got to 101, all-time high. And then we made a little higher, 104, all-time high. Then we made a little higher, 108, all-time high. And then we double topped 109 and then went into this falling wedge. And we did not break out until after we retested previous resistance as support. So this was the support. Boom. That's what happened before we broke out. And if we take this over, that was this resistance here when we were stuck here at the 73.8 all-time high when the ETFs went live for Bitcoin. We came back down. First, we hit it. Here's resistance. We broke out and we came down and retested it first. Chad was calling longs right here at 74.5 or something like that in the group. I was shorting this all the way down. I was stuck in a short when we broke out of here and took a little bit of a loss on that, but I made a lot of money on the way down here. And then that's when we broke out. So here we are now doing something very similar, falling wedge, which is bullish, but it has to do what it has to do first, which could be coming down to either retest this level or even wick down like this, boom, and take out that CME gap and then break out. That's what could be getting ready to happen. I wouldn't put it past it. I tell you what, I will be I will be flipping short if we break through 98 and continue down. Maybe. I want to see it hold first. It could wick down a little bit and then come back up. But if it holds as resistance underneath the 98, I will probably short it down here. But as soon as we get down to this level and we wick through this CME gap, I will long. I'll be posting long signals. I'll be posting short and long signals no matter what happens. But that's kind of where we're at right now, guys. We are kind of slowly trending down towards that 98 again. I'm not at one bit concerned or worried whether we're going to hit it or not. It looks like we probably will. And the only thing that I would be cautious on, guys, is this. I just switched back over to Phemex because it looks a little different. But this upward trending, long running upward trending support line going all the way back to a year and a half ago in August of 2024 is we are on it right now. I mean, 98K is the bounce. If we hit 98K and bounce out of here, then we're staying above this upward trending support. That kind of needs to happen. We can hit and bounce out and then start to climb to a new all-time high. That makes perfect sense. I wouldn't be surprised if that happens. That looks just like all these other times when we did this. Before we broke out. Downward trending resistance, break out. Downward trending resistance, break out. Right? But if it doesn't, and it falls below this line and holds as resistance, what used to be support, support. If it breaks through that and then retest as resistance and starts to drop past 98, yeah, that's a problem. But only if it doesn't come back up after 91. If it doesn't come back up after the CME gap, keep in mind, where's the CME gap? That is, all you got to do is go back to previous support, resistance, support, resistance, support, bouncing off of that and coming back up, back into this channel would certainly be possible. That is a much bigger drop than any of these went through. Some of these wick through just a little bit. This one, I mean, that would be like a $8,000 wick down for that to happen. There's some people that would say that might be the end of the bull market, but I'm not gonna say that yet because we still got a month and 20 days left of a possible huge parabolic move to the upside. And what I'm hoping happen, guys, is that we just bounce here on this line. Forget about the CME gap. We just bounce on this line. We take the next 2 months to get way up here into the 150 range. I would not be surprised if that happens either, and be happy. And then we can worry about the CME gap on the next in the bear market.
Nico,
if it does bounce on 98, how long are you going to wait before going long, and what kind of confirmation would you look for at that point before going long?
Me personally, if I didn't have an audience, which I'm going to do anyway, but I'll tell you guys in advance, I'm going to go long at 98 regardless of whether it breaks through or not. I will just put a tight stop loss under it, probably 20%. So if it breaks through though, that doesn't mean I'm going to reverse my position. What I need to see it do is after it breaks through 98, if it breaks through, I need to see it retest 98 as resistance and not be able to get back above it, and then start to continue back down. Once I see that, then I'll reverse my long.
Right, but what if it does bounce and it starts going up a little bit? Is that just your signal to be like, okay, let's? I mean, is that when you would give us a signal?
Yes,
or would you
I'll either give you a
down?
signal. Yeah, you don't need. I will tell you right now, guys. If it hits 98 and bounces, I'm already in a long, so it's tough for me to give another. I'll give the signal to go long, but you can just go long. But just make sure you put your stop loss under the 98 range in case we're wrong, because it is possible. Right. It is possible that it doesn't hold there. But
so you don't have to wait for it to come back.
That would be a really good entry if it holds.
So you would say like not to wait for it to go up and then maybe come back down to just test as
no, because that would be the third time. That would be the third time it hit 98.
Got it.
That would be a triple bottom right there.
Hey, Nico, I got a quick question. Since the 10th of November, so we peaked at like 250 something on 10 November for XRP. for us that want to use, and we've come down about 10% since in 2 days. So for those of us that want to try and get into utilizing that 10% on the downtrend or say on the uptrend, it doesn't matter. I'm not sure what kind of trading that's called, but you know, the money to be made there, how would you recommend newer folks try to get into those trends where if you look at the hourly, say on the XRP, peaking on November 10th, and then obviously in a constant downward trend there, how can newer members maybe hone in on their skills using everything that we have available to us to kind of take advantage on that 5, 10, 15% descents or, you know, upward trends or downward trends, whichever it is?
Yeah. Well, you got to know where support and resistance is first. So you got a nice resistance line here. You can take a screenshot if you want. You got a nice resistance coming from the top up here. A couple times it went through, but it didn't hold above. And then it weaked up to it, hit it, went above it, support, resistance, resistance, resistance. And it's on its way down. Now, so we have a downward trending support line and a downward trending resistance line. What I would not trade in the middle of this channel, up or down. I'm just going to put it yellow so you can see it. Right now, it's in the middle, coming down. And it's very close to this upward trending support line, which is this red line right here. If I go to a higher time frame, you can see it clearer. It goes back to here. It's upward trending support, and it's coming down to it again. It hit it here, bounced, and as you can see, each one of these candles is higher low, higher low, higher low, higher low. So is it going to come down below that? Maybe it's getting ready to bounce now. Let's just draw an upward trending support line to touch all of those candles. And look, it's hitting that right now. If it breaks that, now that's where all these wicks are. But let's just say instead of the wicks, I'm going to put it right up against these candles. Right? If it breaks that, I would not go short. I would wait to see if it bounces here or here. It's too close to go short unless you really know how to scalp. But if you would have went short up here at the top, so whenever you hit a top, a resistance line, you could short and then just put your stop loss right above your entry. So you short here, put your stop loss here in case you're wrong, and it hits here, you go short, and it comes down a little bit, and then it breaks out, hits your stop loss, takes you out. Then it bounces as support and starts to go up, you enter long. But if you're right on this short, it starts to go down like it did. And then you just grab your stop loss and move it down into profit when you're in profit. And then you're locking in the profit. So as it's going down, instead of worrying about entering another position, you just keep moving your stop loss down, move it down, move it down. This starts to come down even lower, lower, lower. It bounces here. You put your stop loss here, it bounces here, and starts to come back up and hit your stop loss. Takes out your short in profit, you enter long, right it back up. Close out that trade. Enter short, put your stop loss above that. If you're wrong this time, it's going to take you out and hit your stop loss. But if you're right, you're in another short position. So to trade these channels, you want to go short on the tops, long on the bottoms. In fact, I wouldn't even do both. I would go short the tops. On downward trending falling wedges, I only short the tops. I don't long the bottoms because we could have a bottom and then quickly double bottoms, triple bottoms very fast. So I don't want to get caught in that. But if it hits the top, likely to come back down to the bottom. So me personally, I just short the top. So since it's too late for you to short that top, I would just wait for the bounce on the bottom. And the good news about XRP is that we are in an apex right now. And so not only is it close to the bottom, it's close to a wedge. I mean, it's in the wedge. This is the wedge right here. It has nowhere to go. It's either gonna break, it's gonna come down and hit this bottom, hit this top, it's gonna wedge into this little apex, and it's either gonna break to the downside, in which case we could short, or it's gonna break to the upside, which would be a great long. Me personally, I wouldn't short XRP here because right after it breaks this, there is this support level at $2. So, I mean, you could short it. You just have to be careful because that's a nice drop from 220 down to $2. But if it does break this and holds as resistance and starts to go down, then yes, probably going to go to $2 like it did here, 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 and here. And then, you know, this upward trend doesn't even matter anymore, but it slightly is in an upward trending channel. But even if I remove that, guys, even if I remove this, where are we coming to? Possibly just this support level right here. And this really is a nice sideways trending. Yes, there is upwards. I mean, the reason why there's upwards is because we had a high and then a higher high. And we have low and then higher lows, higher lows, higher lows, even though some of these wicks are lower. But you don't have to look at it that way. You can just look at it as a sideways channel, and we're coming down to the bottom of the channel. And if we get rid of this, it's still a sideways channel because we did not hold above this line. We went above it, but then we fell back below it and hit it as resistance. So technically speaking, we are in a sideways channel and we're coming to the bottom. The bottom is where you would bounce and go long. You just put a stop loss under that in case you're wrong. That makes sense?
Yeah, thank you, Nico. Yeah, that makes sense. And then that's testing our trend lines and our theories of resistance and support zones. So I mean, even if it's a dollar trade, you know, throwing in, I think for newer people like me, it would boost my confidence in using,
sure.
you know what I mean?
Yeah.
And the hourly charts or the hourly time frame and so on and so forth, you know, using the trend lines, going in between and writing it down, practicing shorts and longs with a dollar or one XRP. So, you know, if you lose it, you lose it, but it's not a great deal. So thank you for the detailed explanation there.
You're welcome. And guys, I highly recommend you trade with real money and take those risks, obviously, but just use small amounts so that it's not that painful until you get the hang of it. You can do it with mock trading, but the mock trading, there's no emotion attached to that because it's not real and you don't feel anything. You could go to sleep and lose 50 grand and it doesn't change your life at all, right? On mock trading. But so I would practice with real money, but just small amounts until you become consistently profitable. And then you start increasing the amount. But yeah, that's the way to do it.
Nico, can we check the Gaussian channel?
I just went over that a minute ago. Were you on?
Oh, disregard that. I'm sorry, I got pulled over for a bit.
I can real quick. I do got an appointment I got to go to at 3 o'clock, but I got to get ready for. Hold on one second. Let me go back. Did you just get on the call? So here it is. I'm on the 5-day. I'm going to turn on the Gaussian channel. Boom. We are in it, guys. There is no doubt. We are in the thick of it. We are in the middle. And are we bouncing on the middle? I don't know. Doesn't really look like. Turn off the EMA ribbon. Let me turn off some of these other things. Last time we came down in a falling wedge, we went to the middle and bounced out. And we made a new all-time high. We're coming down in a falling wedge. We are at the middle. This time we didn't, we only wicked to the middle and a little bit beyond once and bounced out. This time we hit the middle, bounced, hit the middle, bounced, lower highs, lower highs, lower highs, and hitting the middle again right now. Well, not quite yet. We're almost, well, yeah, we're on the middle. We're sitting on it right now. If we continue down, guys, and we actually open below the middle, the next candle on the 5-day time frame, which, by the way, we have 4 days and 5 hours left of this chart. And look at the money flow. Money flow is flowing out on Market Cipher. Flowing out, flowing out, flowing out. It still hasn't curved around yet. This is what it looks like when it curves around. When it curves around and this light blue area gets smaller and smaller and smaller and smaller, like a wave cresting upside down, that's when you see the green dot. Curve around, green dot, that's when we have money flowing back out. Curve around, green dot, money flowing back in. And that's when the price goes back up. But right now, money flowing out, money flowing out. Look at this. Green turning red, coming down. this going down, this turning red. There's all kinds of reasons. There's all kinds of explanations for all of these little things. But yeah, so maybe 98K. I mean, this is real time too, guys. This line right here is right where the price is right now. No red dot, no green dot, no nothing. We did have a red dot back here, but nothing happening. This is the 5-day, by the way. If I go to the weekly, just getting into this downward trending wave. That's bearish. Let's go to the daily. Daily, red dot on the daily. Just happened. Boom. Red. Red, red, red. And that's because I have the Gaussian channel on. So let me just turn that off. A little bit of an uptick. Boom. Red. Green. Red dot. Money flowing back out. So yeah, we're gonna probably drop right back down to this 98K at the very least, guys. 98K. That's the next spot. We're at 101 right now, getting ready to break through to 100, and then below 100 is 99, and then 98. But all that's going to happen in this little space between where it's at now and here. By the way, when I say 98. Right here, it bounced at 98.7, 98.8, so it's close to 99. But yeah, seems like we're on our way back to that. Everything's kind of winding into this area right here. All right. All right, guys, I got to run. I got to get ready for an appointment that's not on the phone. I got to actually drive somewhere. If XRP drops to around $2, William, I don't know if this is a question. It is more likely to happen before the 22nd, or is it more likely to happen before the 22nd? Any chances it could go below $2 before November? Guys, I do not have a crystal ball. I do not have all the answers. So the answer is yes, there is a chance. Anything could happen. I mean, look, if you would have asked me before if XRP could go below $1.50, I would have said probably not going to happen. Is there possible? Yes. Is it going to happen? Probably not. And boom, it dropped to 125 on the 10. That was like a 60% drop. So everything is possible. Keep that in mind. I'm just warning you right now. Everything is possible. Bitcoin could drop to 20K. Yes, it could. I don't know what would have to happen for that catalyst to make that happen, but it's possible. So what we got to do is just make sure you're not in any open positions without stop losses. Otherwise, you could get liquidated. And liquidation just means, if you're on isolated like me, it just means you're risking your entire margin. Not your entire account balance, but your margin. So if you're okay with potentially losing your margin, then don't use a stop loss. But I would always use a stop loss. Yes, you're welcome, Constantine. Everybody, thank you. Thank you. Thank you for all the thank yous. You're welcome. I appreciate you guys. You stayed on with me 2 hours and 40 minutes today, but you probably still catch Bill's call because he's usually on the basics call for a while too. So get on Bill's call if you have more questions, and it's always good to be on the basics call. He goes over a lot of stuff that I don't go over that's still very important. All right, guys, have a great rest of your day. We are dropping probably to 98, no question about it. So just prepare for the bounce at 98, and let's hope that happens. And if we go below that, I'll be posting in the group my updates and letting you know what I think is going from there. But I think 98 is a safe bounce area to enter a long position, and then just put a tight stop loss under that. But I'll try to post if I do it as well. And other than that, guys, have a great rest of your day. Tomorrow is Thursday. What's today? Wednesday. Yeah, tomorrow's Thursday. We do have a live webinar tomorrow night at 7 p.m. You guys are welcome to get on that. I will be trading live as well, answering questions again. So it's just another opportunity to be on live. That's for the public, but you're certainly welcome to get on there, and just ask for the link in the main chat, or you'll see us posted in the free Facebook group as well. All right, guys, have a great rest of your day. Talk to you later. If you have any questions, just ask it in the main chat.